Good afternoon, everybody. It's Max. How are you guys doing? I was going to run down these high yield funds. It's the end of the day, see what's going on. We'll look at yield max. We're going to look at a little Defiance, but we'll look at a little everything because it's the end of the day. Everything's closed right now. Let's start with the old buffer report. Okay, now I like to focus on the stocks in the yield max universe that have uncapped upside. As far as I'm concerned, Jay ought to uncap the upside on all of them. I've been a proponent of uncapped upside since the beginning. But anyway, Jay has been responsive to customer request. So he's doing a great job. All right, well, Amazon has uncapped upside. Amazon got 1%, or AMZ got 1%. Amazon got 1.85. Still pretty good, though. AMDY got 3.2. AMDY got 5, or AMD got 5.7. JP Morgan got almost all of the upside, as did Coinbase, and that's impressive when it's 3.5%. Aptly got a shitload of upside. Google, or GUI, did well as well. Now, Moderna, the underlying was down. Moderna pulled back today. So this is actually an instance where doing a call spread hurts you. If you knew the stock was going to pull back, you'd want to do a call. You'd want to sell 2 calls if you knew the stock was going to pull back. You'd want to sell 10 calls if you knew it was going to pull back naked, but obviously you don't know that. So, but the call spread still does make some income. Generally, I would say budget about half. So, but what that means is these funds, when they have call spreads on, will have about half the buffer that they used to have. So, it just depends on how you look at it. A small amount of buffer is great on the way up, but it can be bad on the way down. Okay, so AIYY also has on uncapped upside. They have on a call spread. But now the rest of these over here, except for PayPay does. I didn't put it in the right spot. It's supposed to be down here at this end. PayPay's uncapped also. As far as I know, though, all of the other ones are just standard cap covered calls. Now, when we say capped, it just means to a point. These guys, like on MSTY, MSTR is up 9.04%. MSTY is up 8%, even though they don't have a call spread on. You can get upside with just covered calls. Also, with covered call spreads, you can get extra upside. But the way you get upside with covered calls, and they do it all the time with MSTY, is they just write the options far enough out of the money. As the volatility goes up and as the stock can support it, super volatile stocks like Coinbase and MSTR, MicroStrategies, those types of stocks can support it. So let's look over here. Let's look at this chart. Oh, and I forgot to mention it at lunch, but the volatility model on a short-term basis went back to bullish. It actually did it at the start of the day. But anyway, it's late. It's late sometimes. I wouldn't be surprised if that turns out to be a false signal. The longer-term signal is still bearish and has been bearish since late July, since back here. Okay. But back to MicroStrategies. Let's get this off of here. Let's pull up a daily chart of all right, so that is the parent asset. That's MicroStrategies. Now I'm going to overlay the high yield asset. We can look at it together. Let's do it on the same scale. Okay, yeah. All right, so here's MSTY down here. So MSTY, though, let's do this. Let's put MSTY. Move to new pane below. Move to new pane below. Once I do that, do I mess up that other pane I have? I hope I don't mess up that other pane. No, I didn't. Okay, good. I messed up I deleted this pane by accident one time. It took me forever to recreate it. Okay, well, you can see MicroStrategies they're right back about where they started from. Come on. Okay, yeah, so this is no dividends. So they started trading around 20, and here they are back to where they have been trading. But don't say they don't catch any upside. That's what I was trying to say is as long as the underlying was going up, they caught a lot of upside. They caught more than 100% of upside. Of course, it's working the other way for them now. Why in the hell is this doing this? All right. These things catch a ton of upside. NVDY has not done a call spread and it's catching upside. So I'm just trying to show you that the upside these things are able to catch are a result of how much upside the parent asset has. When you choose something like NVIDIA for a parent asset that hasn't even sniffed the 200-day moving average since January of 23, think about that. I mean, that's a pretty bullish stock, and it's no wonder NVDY gets plenty of upside doing covered calls, because you can get upside doing covered calls on stocks that go up continuously, right? Okay, let's see what else we have on here. Let's look at it this way. Let's look at some of these. These are the actual call spread stocks. It even includes PayPal. It just didn't make it to the chart. But this just shows you which one they sold, which one they bought. And I'm looking at some other stuff on here, but basically this column J, that today's out of the money, is what we're rooting for. We just want as many of these to turn gray in column J, and that means we're taking advantage of the call spread. It means the call spread is making us extra money. So let's look at an example of that. Let's look at the JP Morgan call spread. It's right here. It's making us $1,000 per contract. There's no telling how many of these guys have on. Standard covered call diagram, although not really. Standard covered call diagram, if this line right here went straight across, if you never made more than $445, if there was no more upside to be had. Ever since this hit 205, it's been upside city. So let's look over here. We also have the Apple trade, or Apple trade, is up a couple of million. I don't know the exact cost basis of their underlying, because they use the synthetic and they're always rolling it, but they're up in the neighborhood of 2.5 million, close as I can tell with their structure they have on. They sold 220 call. So here's what it would look like. This is your father's covered call fund. That's what it would look like. And that would be great. They would be maxed right now at $869,000, just loving life. That would be fine. But here's this generation's covered call fund, covered call spreads, and same everything else. It's like almost a $2 million difference in upside. It's really good. All right, so that's aptly. Let's see what else we have. I'll try to put some of the spreads in here. Okay, we have Apple. The Moderna one is not making money. It's an example of one that's losing money right now, but let's take a look at it. we're following some of these. JP Morgan. Oh, here's the Amazon one. Here's a good one. This one's up $151 per contract right now. But the really exciting thing is we have almost 24 hours worth of upside we could maybe catch. Wonder if the market goes up again tonight and then up again tomorrow. And then, this trade could turn into a one that looks like more like the Apple or the JP Morgan trade, where it's really taking advantage of the extra upside. So it's not like the call spread trades have to go over the call, the bot call, to be a good idea. That's just the point where you start profiting again. But even if it goes right here where it is, you're making money that you wouldn't have otherwise had. Okay. Now, you made $161 by doing the call spread. If you hadn't done the call spread, you could have made $194. You could have made a little bit more money up front, but you have no further chance of profit down the line. Doing the call spread, you make a little bit less income up front, but the payoff is, you hopefully some of these ETFs that you invest in will have stocks that are like NVIDIA. That's the whole idea. It's like anything else. It comes down to picking the stock. But all right, so let's see. So we've covered PayPal. PayPal wrote the 66 and they own the 69. I thought I had PayPal in here. In any event, it's fine. All the trades are doing fine except the New Year's baby trade, which is that hedge trade for if the market goes down. Now that the market's back going up again, this trade's down $7,000. So, but it doesn't expire. It's just protection. It doesn't expire until New Year's Eve. So all right, so let's look at the stock index buffer report. Look at SPY-T catching a ton of upside. Now, SPY-T does call spreads, just like Apple and just like some of those yield max stocks we were just talking about. So it's no wonder they're getting a ton of upside. Look at ZIVB up 2.7% today. They're killing it. KQQQ, great day. I bet Howard's. Boy, this is the kind of day that Howard's Fund's built for. Notice that Howard's Fund is outperforming every other fund on the board today. That's incredible. Now the payoff is it does not pay a huge dividend. They haven't even paid one yet, but he's targeting 6 to 8%. But at least they get a ton of upside, right? Look at QQT. Speaking of a ton of upside, they almost beat the underlying. They also do call spreads. Telling you guys, call spreads are the future. Future's here. GPIQ, but it doesn't mean it's the be all and end all. GPIQ is a Goldman Sachs covered call fund, gets tons of upside, gets upside all day long, and they don't do call spreads. But they use the method of writing the options that are far enough out of the money. So they get upside in a different manner. RYLD does not look really good. It's RYLD and IVVW are the two worst ones on the board today. But all right, so let's see what else we have to talk about. Okay, round hill dividends. I'm going to try to estimate those. I tried last week and it was miserable. I'll make another guess next week. I was just going to show you guys what I'm trying to do. So I'm taking a reading of volatility at two different times during the day. There's a 1-day volatility index. So I can look at the opening price, and that tells me the kind of volatility that Round Hill's getting for selling their options, because they sell at the open generally. Okay, so that's how to price your volatility. Defiance sells the night before, so I can look at a closing quote on the night before's volatility. Sometimes there's a big difference between the morning and the closing. So I'm trying to establish patterns like that and trying to show you guys more ways that Round Hill and Defiance are different, and in some ways they're the same. I think they're both great funds. But in any event, I'm trying to get some more content on that going. What I'm doing is I'm doing a 5-day moving average of the volatility. So the one thing that tells us, it tells us what the past 5 days volatility has. These guys pay 5 days at a time. So anyway, based on this index, I'm trying to find a way to tie it to an actual payment. So we'll see. There's my guess last time. I have the wrong, that's the wrong thing. This is supposed to say guess. Well, no, it's not supposed to. But anyway, my guess was, I think I deleted my guess. My guess was like 35 cents. But in any event, but I was looking at the 5-day rolling average, and it's low, but it's been a lot lower other times. So, but Roundhill, they hold some of their distributions back, and they use it to try to make even payments. So it's not a matter of just how much is available. There's a lot more that goes into it than that. I'll try to generate some content. Here's all of their dividends that they've paid so far, just in cents per share. The first one was 36 cents back in March. I noticed this one was only 9 cents. That's crazy. I don't remember that, but that was really low. But then since then, outside of this time, it's 14 cents. They've been pretty good, except for this last time. It came down to 20 cents. That's why it surprised me. To me, it was looking like I was going for somewhere in the middle of this range, 35 cents. So, but then somebody on Reddit said that this week they took out the vacation day. They were just paying for 4 days, and that would make sense because of Labor Day weekend. So, all right. But anyway, I'll try to get some Roundhill content. Defiance, real quick. Let's just see. These guys all made money, and these guys are killing it. JPY is up $1 million right now, 48 cents a share. Going to pay a dividend of around 247, which comes to 67%. Even in old numbers, that would be 82 cents, and 82 cents would be the highest number on the board. And I don't have all the numbers on the board, but 82 cents would be a huge dividend. So good news for Defiance. We'll look at Triple QY. Triple QY, they're up 5.1 million, 85 cents a share. Going to pay a dividend of 270, which is 89%. They're killing it. IWMY is killing it. They're up 4.4 million, $1.13 a share. Going to pay a dividend of 313. Going to be possibly around 100%. Just absolutely killing it. These guys are killing it. USOY going to pay a dividend of around $1.09. They still have this option open. We'll see how they do tomorrow. They've won 2 of the last four contracts. We'll see how they do on this one. Price of oil is going up. Price of everything's going up, and it's looking like they're in good shape. Here's what it looks like visually. We'll go back down to the shorter term charts. There's a 30-minute chart. I also had some profit boxes drawn on here for the call spreads, like on the yellow boxes are call spreads. It's just like any of my other profit boxes. You want to be at the top line or above. Really just the higher the better, though. There's no advantage for like going right to the top line and stopping. But anyway, we have that going on too. We can also look at JP Morgan. You can see they've blown out their covered call spread. They're well over the top of it. Who are some of the other ones? MRNA. Now, this one's going the other way. This one, they sold off. What else? What else was on the call spread? Oh, yeah. Look at PayPal. Look at that one. They took off and left their left their call spread in the dust. All right. But yeah, for those of you that are still here, unfortunately, or I say unfortunately, I think it should have stayed short. I just don't see this market going up. But anyway, right now the path of least resistance is up in the 30-minute time frame. And that's based on a proprietary method I developed that's looking at volatility and the volatility of volatility. Looking at volatility 3 different ways: through VIX futures, VIX cash, and VIVIX, which is VIX and VIX. Anyway, and I've written an algorithm that it could be fairly accurate. The last time it was bullish, back here it switched bullish at SPY 548. And then SPY went up for a couple of days to 561 before it switched bearish again. Now, the bearish one was no good because it switched bearish at 561. Then this morning it says, oops, my bad, bullish at 570. So it doesn't always work. But right now it's calling for a counter trend rally. We had one back here. We had a major counter trend rally back here. SPY's on fire, though. The market's on fire, so we'll see. The timing model's based on the SPX and the VIX. But it's probably pretty close to if I based it on the NASDAQ. All right, I should have had that on the noon update. I don't think anyone's really following that, but anyway, I should have updated that live in real time. I'm going to be excited whenever it all turns green again, like it did back here, whenever happy days are truly here again. The last time that happened, when it had been red for a while, it was after that pullback last September or last October, the end of 2023, October 2023, vicious pullback. Remember that? But then right around, or no, this was actually the April pullback. This was the April pullback from this year. But anyway, right around April or right around May 3rd, it gave an all clear signal, green in the shorter time frame, green in the longer time frame. Boom, we're off to the races. That was a great signal. That was at SPY 511. So, and then the longer term time frame switched to bearish, but that was a few months later in July when SPY was at 555. And boy, was that a great time to go bearish in late July. And that showed you the path of least resistance was down. That showed you the professionals were putting hedges on. Whenever it's green, they're taking hedges off. That's the idea anyway. It's just an indicator, nothing's magic. It can't tell the future. It's just one of many things to look at. Anyway, hopefully you guys like that. I appreciate you guys for being here. And I'm trying to think if I have any more content planned for today. I don't know for today, but I'll be back tomorrow for sure. Okay. Thank you so much. Have a great day.